Good morning, everybody, and welcome to the Top 5 Crime Coverages Needed to Protect Your Community Associations Against Cyber Loss webinar. I'm Sherry Branson, Marketing Manager with Kevin Davis Insurance, and I'm now joined by Kevin Davis, the President of Kevin Davis Insurance. Good morning, Kevin.
Oh, hello there. How you doing, Sherry?
Doing great, doing fantastic. How are you?
I am doing well. Yeah, doing pretty good. Doing pretty good here. Yeah. Nice to be back.
Great. We haven't done a webinar together in a couple of months, Kevin, so it's nice to do one again.
Yeah, and this is going to be a really good one here because we get a lot of calls about what's going on in crime insurance and what makes a difference in crime coverage. So I'm glad we picked this opportunity to really talk about this today.
Absolutely. I'd like to welcome everybody to the webinar today, and we have a few new people joining us from across the country. I'd like to welcome you, and you may not be aware, but I record all of our webinars and I put them on our website, which is kdisonline.com, so you can listen to today's webinar and all of our past webinars as well on our website. And Kevin, we're going to talk about crime, and you and I have been getting a lot of emails, a lot of phone calls, for quotes, and people have questions about cyber, etc. So what is our goal today?
Sure. Today is make it simple. Simplify what crime coverage is. We're going to talk about the 5 coverages that you need to know about in terms of cyber that's on the crime policy and why these coverages are really important to protect associations' funds.
Absolutely. Crime coverage has really evolved over the past several years due to the changes in technology. We have a lot of new technologies out there. So the coverages have really had to catch up with what's going on out there regarding crime. And some of these coverages, we've never had them a couple of years ago. They're all brand new.
If you look at things like social engineering, right? Or even something called telecom fraud, we don't even know that many carriers even provide coverage for these things. So right now, what we're going to talk about today is the 5 coverages that you must have on your crime policies to really protect your association against cyber attacks attacking the funds.
Absolutely, absolutely, great. And now, Kevin, when we talk about cybercrime, can you explain what exactly is a cybercrime?
Sure. When we talk about cybercrime, cybercrime is basically any criminal activity that involves a computer. For example, a cyber theft, what they want to do is gain access to the association's network. And they want to be able to steal a couple of things. Number one, they want to steal association assessments, reserve account, vendor payments. We talk about funds, the dollars. Or they want to take personal identifiable information of the people who live there. We're talking about an individual's name, social security numbers, driver's license number, account number, causing what we call a data breach. All right? And our focus today is to talk about the criminal activity to steal associations' funds. We're talking about the reserve accounts, the vendor payments, just the daily accounts, operating accounts. These exposures that's covered under the crime policy. That's what we're going to talk about. Not data breach, just the things covered under the crime policies.
Okay, just under the crime policy. And people are probably wondering, how do these cyber criminals do it? How do they commit the crimes?
Yeah. Now, the most easy way or the common way is that they just send an email with a link attached to, and a virus is attached to the link.
Oh, interesting. Okay, that brings up something that just happened to me last week, where a broker that I email back and forth with quite a bit, so I know who she is, she was hacked, and I received an email from her that I thought was from her. It looked very legitimate. It looked like it said her agency, everything was correct, but there was something a little bit off about it. So I didn't click on the attachments that were in the email. It had told me to click on the attachments to get the documents, etc. Make a long story short, I didn't click on it. 2 hours later, she sent an email out to everybody and said I was hacked, and there were fraudulent emails sent out on my behalf, and please don't click on them. So basically, if I clicked on that, they would have had access to my computer and my banking information, etc. And they're just getting bolder and bolder and sending more and more emails out. It's happening really to everybody.
Exactly. Just think about it. If you would have clicked on one of those links, right, they would end up having all the information, your financial information, your social media information, your routing numbers, checking account numbers, credit card information, all that information they would have had. And that's why it's important today when we talk about community associations, because we look at how they are developed and made. It's really becoming easy for the cyber criminals to trick volunteer board members into giving them really specific protected information. You know, for community association, getting that really proper protection, the protection they really need today, is difficult. Because when we talk about crime coverages, crime itself, historically, all we did was talk about the theft of funds by an employee. And that's what we're talking, that's what we've always historically have talked about. Today, the exposures, there are more exposures of crime insurance involving theft by non-employees, which provide coverage like social engineering, computer theft, wire transfer fraud, telecommunications fraud. These are all critical to protect the assets of the community associations.
Mm-hmm. Absolutely. Absolutely. And Kevin, when we're talking about crime insurance policies, can you explain to everybody joining us today, are there different types of policies available?
Sure. What we're talking about here, it really falls into the three separate categories, okay? The first one is a standard package policy, okay? Where you buy your package, they throw in the crime. It's usually at a very low limit, really not even enough to provide the coverage they need. The definition of employee does not extend coverage to the property manager. In fact, it doesn't even extend coverage to non-compensated board members. So the package is the worst. If you have a package crime policy, it's very limited. The second is just a monoline crime policy that's a little bit broader. You may have some protection for the management company. You may have some protection for some computer theft coverages, but it doesn't have the necessary coverage for a community association. So the best protection available is a standalone crime policy that's specifically designed for community associations, and they provide all the coverages that we're talking about right now.
Mm-hmm. Okay, standalone. So standalone is the best way to go. Fantastic. And great. And Kevin, I know the first coverage that we're going to talk about is employee theft coverage.
Yes.
Can you explain that a little bit and get into the definitions of it?
Sure. When we talk about employee theft coverage is a direct loss of money, securities, and property caused by theft or forgery by identifiable employee. Now, there are three terms there. There's theft, employee, and identifiable employee. So let's talk about what is a theft. A theft is the intentional, unlawful taking of money, securities, or property to deprivation of the insured by identifiable employee. Okay? So when we discuss the definition, there's a difference between being mismanagement of funds and theft of funds, meaning that too often unit owners who live in community associations claim that reserve account has been mishandled or the operating account has been mishandled, and they're seeing missing funds because of roof repair that's not being done properly or decks after repairing after a loss. It's only under a loss if it's a theft, if it's an intentional taking of funds. It has to be intentional taking of funds. That is the key.
Okay. So if the board overpaid, let's say the homeowners thought that the board overpaid $200 to fix the roof, that would be considered mismanagement, not theft.
Exactly. If it's management of funds, you're talking about a D&O liability loss, not a crime loss. Okay?
Okay.
Now, also, you got to point out is that you have to actually point out who the employee was that stole the money. You know, that means you, Sherry, if you are the board president, you have to point to your treasurer and accuse him of stealing the funds, right?
Okay.
Yeah.
That's an uncomfortable situation. That would be very uncomfortable.
That's why identifiable wording is so important. So check your policy to make sure it says whether identified or not. Okay? Don't go with identifiable employee. Don't make it the board's responsibility to point to that finger to somebody. Just check the wording, whether identifiable or not.
Mm-hmm. So basically, Kevin, what you're saying is all you have to do is prove an employee committed the act, correct?
Exactly. You don't have to actually point out that individual.
Okay. Okay.
One more thing is be careful under the employee dishonesty, because do not accept a policy that has what's called an arrest and conviction clause.
Okay. Why is that, Kevin?
Yeah, because again, you don't want to have a claim and the claim is subject to, coverage is subject to, the person has to be arrested and convicted before, and say how much money was stolen before a claim can occur. So be careful of arrest and conviction clause on there also.
Okay. Okay, great. And
So
you mentioned an employee, can you define who is an employee, Kevin?
Sure. This is important because an employee is anyone who's compensated by wages, salary, and commission. That is the definition under most crime policies. Okay. Now, if you think about it, though, most of the people who serve on condominium boards are volunteers.
Right.
You got to make sure you extend the definition of employee to include non-compensated board members. And the management company should also be added as definition short because guess what? They handle funds also. So the management company, non-compensated board members should be definition defined in the word employee.
Mm-hmm. Okay, that makes sense.
These employees can be current employees, can be past employees, because you see a situation where you have new board members, old board members that have a gripe with the association because they don't like the way they handle the roof, they don't like the way they handle the day. Okay, and so they justify into committing dishonest act. So that is really where your problem comes into play. And again, once one person decides to get in, I don't care if it's a past board member or current board member, they have access to the credit card information, social security numbers, banking information, email addresses, anything in there that can create a problem for the association to lose funds.
Mm-hmm. And like you were saying, Kevin, past board members are going to have the passwords. They are going to have access to that system. So if there is some kind of a gripe, the system is then vulnerable to people that have easy access to it. And you talk about ex-employees. Are they always covered, or are there certain limitations regarding coverage for ex?
Yes, because again, in community association, at one point in time, everybody is going to be a current board member or a past board member. Now, if you have a crime policy, they can extend ex-employees to about 60 days. So if crime committed in 60 days, coverage should be provided. If he's no longer an employee and 60 days is up, guess what happens? You have to use the other insuring agreements to discover the loss. So if he's an employee, no problem, no matter what they do, if the employee committed dishonest act, it's not covered in here. Non-employees are on the next 4 insuring agreements.
Mm-hmm. Okay, great. And I did want to pause here for a second and mention, if you look on the toolbar, you'll see a questions box. If you have any questions about anything that we go over during the webinar today, feel free to type your questions in and we'll answer some questions at the end of the webinar. If we don't have time to get to all of your questions, we will give you a call or we'll send you an email to answer your questions. So feel free to send questions in, everybody. We'll do a little Q&A at the end. And again, I wanted to mention that I record all of our webinars and put them on our website, which is kdisonline.com. Okay, great. And now, Kevin, the next coverage that we're going to talk about is funds transfer fraud coverage. Can you talk about that a little bit?
Yes, when we talk about funds transfer fraud coverage, this is if a bank, financial institution, gets a fraudulent document directing the bank to transfer, pay, or deliver funds from the association's account without their consent or knowledge. Okay, let's use an example here. You got a former board member, okay, former president of the association, who still has the old president's ID and password. Again, because they never changed their ID and password, so they have that information. So they create a request to send $10,000 from the association reserve account to this fictitious board member, to say he's a new board member, he's a past board member. Mm-hmm. The president later finds out that the funds are missing, and then he submits the claim to, guess what? This fraud transfer claim coverage under our policy.
Okay.
So the transaction wasn't authorized by the president. The fraud was committed without his knowledge and consent. And that's important to understand because he may have given that former board member his ID and passcode. So he may have said, here's my ID and password, but the fraud was done without his knowledge. So that is the key.
Okay. And now we're going to talk about computer fraud coverage, which sounds similar, but I know it's a little bit different. So can you talk about that, Kevin?
Computer fraud, kind of really similar. It's the use of any computer to fraudulently cause a transfer of funds inside the premises. The key word is inside the premises, okay? So a place outside the premises without the insured's knowledge and consent. The key here, again, is inside the premises. Coverage could really apply here. We're talking about where they got a visitor or a contractor or unit owner comes into the association premises, gain access to a computer, and then directs the paid funds to his own personal account.
Mm-hmm. Okay, and as a matter of fact, I just read an example in an insurance newsletter that I received where a woman, it wasn't with the community association, but it was an elderly woman who had a helper coming into her house a few times a week, and the woman did get her password and her banking information and was transferring money from her account into her own account. And I think she transferred something like $10,000, but over a course of a year, she transferred $200,000. And so it was a big mess.
Yeah.
So this is an example of a contractor or a worker coming in and getting access to your computer.
And just think about, what if that person who you're talking about there happened to be the president of the association who had access to the reserve account? Now your person who comes outside the premises, goes and have access to that person's funds and transfer funds. That is exactly a good example of this computer crime.
Mm-hmm. Mm-hmm. Absolutely. Absolutely. And now, Kevin, the next one that we're going to talk about is fairly new as far as coverage goes. I think it's one of the newer ones, social engineering fraud. Now, can you explain this one? I mean, all of these are, fraud related, but this one's a little bit different.
Yeah, this is new, okay? And again, social engineering fraud, well, again, it pays for the loss of transferring, paying, or delivering funds. Came out. But this is different. This is committed by a person pretending to be an employee, vendor, or client.
Okay.
Pretending.
Okay. So this one's basically accessing the computer system, has your login. They get in there and they're pretending to be, it's a fake contractor, a fake person that you're working with, and then they go ahead and they transfer the money. Okay. And they willingly surrender the funds, right, Kevin?
Again, we're looking at all three of these things. These coverages are the same. It is a bank transferring, paying, or delivering funds committed by someone who's dishonest. The difference between social engineering, computer fraud, and funds transfer is that social engineering fraud claims occur by the employees willingly surrendering funds. In computer fraud and funds transfer fraud, okay, employee funds are transferred without the insured's knowledge or consent.
Mm-hmm.
So,
okay.
Engineering, you have that. So, let me give you an example, Sharon. Okay, a person pretending to be the association's landscaper requested they send payment immediately to avoid paying any late fees. But what they do is say, guess what? We do have a new bank because another old bank's under audit, and we have a new routing number. Once they say those two things, got to be suspicious. But they say it, the person who filled out the application, the person who filled out the request, the payment request, didn't verify the information. So the money is sent to the imposter, and now the company's out of thousands of dollars.
Mm-hmm. And I'm thinking back to the email that I received that looked like a legitimate email. It looked real. So I can see where these hackers would be able to create a really authentic looking email to trick somebody, where they would do a bank transfer, and it's not that hard to do.
And we get these all the time. We get these emails that are fake, that are saying UPS, but the only thing they say UPSS, or they'll have your Bank of America, but they'll spell America wrong. And all they want to do is trick you into sending money directly to them. And again, once you're willing to do it, that means it's with your knowledge and consent. If it's with your knowledge and consent, it is not a computer fraud. It's not funds transfer. It's social engineering. You have to make sure social engineering coverage is on your crime policy.
Okay, great. And again, if anybody has any questions, please type them into the question box. I do have a question here, but we will answer you later. Kevin, a question has come in from Virginia.
Okay, good. Okay, number one. This number one is a very interesting one because it is a brand new coverage. It is called telecommunications fraud. Okay, telecommunications fraud is the unauthorized access of an organization's telephone system that results in increased service charges. This insurance agreement only works if the telephone system is in a name insured. So if you happen to have a condominium association that doesn't have a telephone system in there, you don't need this coverage. But if you have it in there, again, this coverage is a necessity to prevent these kind of charges.
Okay. And can you explain a little bit more about how this works, Kevin?
Again, we're talking about a non-employee gaining access to the telephone system, whether they're making long distance telephone calls or those high premium calls, and no one notices until the bill comes in later on in the month or the next month or in 3 months.
Okay. I do know of an example where a management company hired a janitorial service to maintain their common area and the manager's office, and the janitor ended up using an office phone to make long distance phone calls to a different country and basically just got a huge phone bill. So
Yeah.
this is where this coverage would come into play.
Yeah, and the new coverage will be offered on all renewals and new business. I think it's about $100,000 limit, and it's a small additional premium. So again, if you have your own computer system, a phone system, and a lot of times these phone systems are hooked up to the internet. So again, when somebody really gets access to these phones, can create a big problem for a community association.
Mm-hmm. Absolutely, absolutely. And now let's talk about some of the other crime coverages available, Kevin. Some other ones that people should be aware of, that are in a policy or should be in a policy anyway.
These are other coverages that, again, people forget about, but things like forgery and alteration. These are loss sustained through forgery or alteration of some kind of a negotiable instrument. This is happening more and more because these printers and computer systems are producing more and more checks, and these checks are becoming easy to duplicate. As a result, we're seeing these forged documents over and over again. And again, these are non-employee related, not employee. Employee forgery is covered in the employee dishonesty.
Okay.
Money orders and counted for currency, same kind of situation. You accept money in good faith, but it's worthless. Again, because of computer systems and printers, it's easy to make fake money orders. And again, because of the way computer systems are, you may want to have some money order counted for currency. We have premise and transit coverage. Premises means that it's the disappearance, destruction of money securities committed by, again, a non-employee inside the premises. The key word here is destruction and disappearance of money. So that's the difference here. Destruction is the same thing for both premise and transit. One's on the premises, one's in transit, is before just losing the funds as opposed to somebody actually stealing it. So those are other coverages. There are more coverage you can have in the crime policy. My key thing today was to give you the 5 major ones that have to do with cyber coverage. These cyber claims we are seeing them. They're happening all the time. We talked data breach a couple of months ago, totally different than what we're talking about today. These are coverages covered under the crime insurance policy. Make sure you have all 5 of those. And again, you're not going to hurt you to have these 4 additional ones, and as much coverage you could possibly get, you should have, because we're seeing more and more claims.
Okay, fantastic, great. And again, if anybody has any additional questions, please send your questions in. We'll answer Virginia's question in a second. I did want to mention that we have really new, easy requirements for you all to get crime quotes. And all you have to do is send an email into your underwriter, your D&O underwriter. There's no application needed. All we need is basic information such as the name of the association, the address, employee count, and then you answer yes and no to a few questions, such as are the bank accounts reconciled by someone other than the person responsible for deposits, withdrawals, signing checks. Again, that's just a yes and no answer, so it's super easy. I do have a flyer that I put together, which is under the handout section. I wanted to also mention the PowerPoint, today's PowerPoint, and this flyer, which tells you how to get the easy quotes, is in the handout section. So you can just download those 2 handouts and you'll get everything that you need from today's webinar. And it's a great way to get a quote. It's really fast. We know everybody's super busy today, so this is going to save you some time, which we all can save. We love to save time. So wanted to mention that, and I've been sending notices out about that as well. And I know we're getting a great response. And now, Kevin, we're going to get to a couple of questions that have come in. Let's see, we have Virginia H, who sent in a question. Virginia would like to know, so exiting the board, so she's talking about an ex-board member, is only covered for 60 days? That's her question.
Yeah, well, again, all policies are different, but the key thing is that 60 days is probably the more standard one. But again, once that's over, if you have these other additional coverages, it should be picked up as a non-employee. So, but an ex-employee normally has a 60-day window there to define any claims or discover any losses while they were there.
Okay, thank you, Virginia. And now I have a question from Tammy. Thank you, Tammy. Tammy D. Tammy would like to know if a property management firm's employee, so this is a property manager firm's employee, steals money from an association's checking account that they're managing, what coverage would apply?
Okay, great question. First of all, once you name the property manager to the crime policy, they're now an employee. So if an employee, if that employee steals a check out of a reserve account or an operating account for, let's say again, like the $10,000, it would be covered under the employee dishonesty. That person there is an employee under the policy. So it would be covered under the employee dishonesty part of the policy.
Okay, fantastic, great. Thank you for your questions, everybody, and thank you for everybody for joining us today. Thank you, Kevin. Thank you for a great webinar. And again, I want to mention one more time, the PowerPoint from today's webinar and the handout on the fast and easy crime quotes is available as a download. You just click on the handout section and you can download those 2 documents. And then thank you for joining us. And I put the recording of today's webinar on our website again, which is kdisonline.com. Have a great afternoon. Thanks, Kevin. And thanks, everybody.
Sure. Take care.
Take care.